in the Federal Capital Territory, Abuja. And it's a wrap on the World Pension Summit Africa edition, where Abuja was a host city for the first ever edition of that program. And hopefully it's going to be an annual program to be hosted by other African countries. And we've been looking at infrastructure financing on today's edition of the program. Our guests have been Dr. Isse Owie. He is the Associate Fellow at the Center for Infrastructure Policy Regulation and Advancement. And also with us is Ogbonna Okuku. He is the country representative at the International Institute for Investment Promotion. Thank you, gentlemen, for sticking around.
Thank you.
Before I went on break, Dr. Owie, I'm going to continue from where we stopped. We're talking about mortgage financing. It's a very interesting area, and I know that Nigerians, if there's anything that they want, is a roof over their heads. And it's an area that I think some state governments are beginning to look into. We've seen ownership scheme in Lagos, for instance. But how well do you think investment in this area would help boost the creation of more homes for Nigerians?
Yeah, I think the point I was trying to make before I went on break was that the new Pension Reform Act now provides that contributors can use the funds they have in their retirement savings account. They can use part of it to secure a loan to own their homes. That for me, it's very commendable, because when a worker keeps working and is contributing money towards his pension, and he also knows that at some point he would be able to use part of what he's contributing to secure his own home, I think that gives him more comfort. But on a larger scale, with the amount of funds we have under management in Nigeria, $26 billion, I think it's a good opportunity now to unlock part of that money for mortgage financing. But we also need to be careful, given our own peculiarities as a nation. We don't have a credit rating agency. We don't have proper proof of address and whatever. We need to work with the ministry, with other stakeholders, to have a system of mortgage financing that, not just for money, but other securitization instruments they would need can be done as quickly as possible, because the funds are already available, given the size of what we have under management in pension funds. But overall, it's a welcome idea, and like I said, the new Pension Act clearly says PFAs can now invest in real estate. It's a clear provision authorizing them to invest in real estate. So I see nothing stopping mortgage bankers and development companies from coming together to put together bankable proposals for PFAs to finance. Okay,
so with everyone is not looking towards pension funds. It's a whole lot of money that's been stuck somewhere, and now let's begin to pull from it. But I'm just curious about a particular issue which has to do with the value of this fund in years' time. And one of the reasons why people are talking about investing them is because they feel that if you keep this money in the banks, they can depreciate in value if you do not invest them. But how do you now balance the issue of inflation rate with the value of these funds in years to come? What do you think should be done in that direction?
Yeah, that's actually why what it is large portfolio invested on behalf of the contributors who are either employees or retirees. So it's either, you can't leave idle funds. I mean, there's no way in the world that funds are just dumped there. Actually, it has to be invested, and then the purpose of investment is actually to recoup and actually to make profit, or to increase the value of the funds. Now, these are things, if you invest your funds, you actually expect a return, and that return is actually what you use to actually, when you have things like inflation hitting the money or the value of the money, these are things that will actually help you, to boost, it's like a booster, to make sure those things don't happen to those funds. Then again, see, we have just started scratching the surface in the first 10 years since after this reform started in 2004. We're just talking, if we have about 16 million people working in Nigeria, and you just have about 6% of them, or 10% of them, if we have 6 million contributors, that's about 10% of them. So we've not even started scratching the surface. All we need to do is actually look for a way to actually get more people. And then with this real estate this real estate financing structure, it makes it easier for people who want to be part of it. People actually begin to put pressure on their employees to actually, see how they can, unlock this particular opportunity, because with that means every person that is working in Nigeria would have roof over his or her head. Okay.
Okay, Dr. we're running on stretch. We're wrapping up the program very shortly. I'd like you to look at this issue of investing in foreign assets. Do you subscribe to us taking part of our pension funds to invest in foreign countries?
Sure. I mean, it's not just what I subscribe. It's in the law. Section 86 that I quoted earlier of the new Pension Reform Act allows PFAs to invest a proportion of their assets under management in foreign companies and in foreign markets. And as a matter of fact, just some earlier in the year, Seplat Petroleum, which is one of the biggest indigenous oil prospecting companies in Nigeria, listed $500 million dollars on the London Stock Exchange. And I'm aware that institutional investors such as PFAs took a substantial amount of that listing. So I subscribe very fully to PFA's listing in foreign markets under very strict guidelines, so as to avoid what happened in 2008. If you'd gone to a jurisdiction where that was badly hit by the meltdown, it means your own books would be, badly affected. But for me, it's not a problem, and good enough, it's backed by the law. The law says you can actually go to foreign markets and invest.
I'm going to come to Ogbonna, because this issue of investing in foreign assets become very important, looking at the volatility in markets and global markets.
Yeah.
A lot of Nigerians are looking, or rather a lot of investors worldwide are looking towards emerging economies like Nigeria to invest in. So if we were to take our monies to the developed countries, we have to consider the volatility that actually plays out in those countries.
See, that is why globally what happens is actually like in the Latin Americans, if it's just a percentage, maybe about 3-4% of the total asset that you can actually take out, not like, because that's actually the practice. I don't think it's backed by law, but it's actually the practice, because you look at sensitivities and things like foreign exchange risk on foreign exchange, affecting the funds that you're going to invest out there. So then again, just like you said it clearly, there are lots of investment opportunities that exist in the developing countries, which are actually one of those areas, which I also think with these huge funds coming up, the horizon is opening up. So I think we actually have to consider some other areas, because, I mean, look at the trade imbalance that exists within us and other countries, like the developed countries. You see, with that kind of imbalance, you will always have, a strangulation on your currency. So that would also mean at every point in time when you're about to, repatriate your funds, you also face that same risk of actually, having your funds, being depreciating based on exchange rate.
So the exchange rate should be looked into.
It should be looked into.
Rate between Nigeria and other countries
yes,
should also be considered when you want to invest outside of the country. I think at this point I'll just have to put a stop to this conversation. It's been very incisive and, of course, very important and very interesting as well. Thank you, Dr. Eseoye. He is the Associate Fellow at the Center for Infrastructure Policy, Regulation and Advancement. Thank you for coming. And also Ogbonna Okuko is the country representative at the International Institute for Investment Promotion. Thank you, gentlemen, for coming on the program. We do appreciate it.
Thank you very much.
And on that note, we wrap up Business Morning. We do appreciate your time as well, viewers, for also joining us on the program. We hope that you hook up again tomorrow as we continue our regular programming back in Lagos. I am Bolaji Akinwale.